Hi, my name is Colette Rabba, and I'm with Orion Realty. I'm a residential real estate broker in the GTA West, an income property specialist, and an investor myself. The reason why Araceli and I like to do this show is because we're both investors and we love to give great information to viewers and listeners just like you.
Welcome, everyone. This is Araceli, wealth advisor and real estate investor in the US and Canada. And in my weekly chat with Colette, we have just a kind of
Tidbit
about mortgages today. So Colette, can you introduce yourself?
Not a timbit, but a tidbit.
Well, a lot of people might not know what a timbit is.
Well, we're Canadian, so maybe we should change it to timbit. We're going to give you a timbit today. Anyway, hi everybody. My name is Colette Rabba. I am a real estate broker in the GTA West End, so that includes Etobicoke, Mississauga, Oakville, Burlington, and I don't like to go further than that, but maybe I will for you. So we'll talk. Anyway, today we have a great episode. We also have to have a little disclaimer that Araceli and I are not mortgage brokers or lenders, but we like to have information for buyers or for income property buyers to just give you that little bit of information that you might not realize, but you, today's episode, have to qualify for a higher rate than the mortgage rate that is currently available to you. So, do you want to say a little bit?
Yeah, so the reason that we're putting this together is, first of all, because as you know, as a wealth advisor, I always work with clients to figure out what they are ready to qualify for if they're buying something, whether it's their own home to live in or an investment property. And now that interest rates are going up, we just want to give you a little bit of an idea of what that is going to look like in terms of payment. But not only that, but because here, at least in Canada, we have this stress test. And basically what it does, it qualifies you at a higher rate that you would get. Let's say if you actually qualify for 2.5, they will give you a higher rate that you also need to qualify for. So that means in the case the interest rates rises above or close to that number, you're still going to be okay.
Right. So the interesting thing about what we call a stress test is different than a minimum qualifying mortgage rate. So a stress test is, and we use the term interchangeably sometimes, so you have to be careful about that. If you're refinancing your home, or you take out a home line of credit, a HELOC, or if you switch to a new lender, but you're not renewing with the same lender, that's called a stress test. If you have a brand new mortgage and you are submitting your application or all your paperwork to a lender or a mortgage broker, that is called a minimum qualifying rate. So it's a little bit different. And so I'm just gonna have a little blurb. I'm gonna read it to you so you understand what that difference is. So we're talking about a new mortgage, and obviously this could be on the internet forever. So we are currently in the spring of 2022. So the most recent changes introduced to new mortgage qualifying rate for all uninsured mortgages and insured mortgage applications submitted on or after June 1st, 2021, which was, it's almost a year from now, a year ago. The minimum qualifying rate is based on either the benchmark rate of 5.25% or the rate offered to your lender plus 2%. So this is only for you to qualify. They're not saying you have to pay this, but they have to know you can pay it if it raises up to that level of 5.25 or plus 2% of whatever the current Bank of Canada.
That's what it's called, a stress test, because they stress you out giving you the number.
Right. So that's the thing that, and really read your paperwork too. This is something that I always tell my clients too. Araceli does the finances for somebody, and if you can, let's say she's doing the finances for you and she can go to the mortgage, she can see your mortgage rate and say, oh my gosh, you know what? Maybe you should go and refinance it because the rate is still lower than what you currently have. And that way you can save money. So there are things that using a financial advisor can help you with save money. So it might actually be your mortgage rate too, because
Correct.
the mortgage rates are so low currently.
Yeah. So what I want to say about that for refinancing, just don't think about jumping ships because you have something half a percentage or anything. You have to look at other things, especially if you have a term, and the term usually is 3 to 5, sometimes 7 years, and that is how long your interest rate would be for. And if you have a term, let's say that you just started a mortgage and it's 5-year term, you're going to have a penalty to break it. Now, if you are within a year or less than 12 months for renewal, you may look at the new rates, and it might be worth it to just pay that little portion of interest. To break that mortgage, but don't try to jump in. Yeah, and depending on different banks here in Canada, they have different criteria for breaking the mortgage. So just be very careful. Don't just try to jump ships from one bank to another because half a percentage. Look at all of the requirements, and the best way to do it is call your existing mortgage holder, like whatever institution you have it with, and ask, if I pay off my mortgage today, what is the penalty?
Absolutely. So, and the other thing,
and then you have a better idea.
Yeah, and then you have a little chart too of the difference between rates. But let's just say your lender offers you a rate. So this is the minimum qualifying rate. So let's just say your lender offers you a rate of 2.99%, which is still possible, right? You'll have to use 5.25 qualifying rate in the stress test for you to actually get the mortgage. So that's depending on your income, that's depending on how much debt you're already paying to something else possibly. So it's not a clear, even, everybody gets this rate.
That's correct. Also remember your credit score.
Right.
It's very important. Yeah. So that's why it is so imperative for you to continue to look at your credit score, check it at least once a year. And if you start working with me and we are looking at buying a property, I will take a look at that, and then I'll refer you a mortgage broker so they can start looking at your credit. And if you need to do anything to change it, you're gonna have to probably do some work during a period of time. So that's why don't leave it for the last minute. The longer you plan this, the better off you are, because if you don't have credit, you need to start building credit. If you have bad credit, then you need to fix the credit. If you have something in your credit that needs to be changed, you need to change that. And it doesn't change in a button.
In a minute. It's just like we always say, it's just like losing weight. You can't snap your fingers and you drop 20 pounds. Not me anyway.
I wish.
The same way. You can't just snap your fingers and have all your finances figured out and have all your credit be stellar. So, we're all human. We just, there's stuff that we sometimes buy on a whim, and it's a lot of money that we may or may not have had. Not talking about personal experience, but I'm just saying, you have to do these things, and sometimes it takes time to figure all this out. And
absolutely. And it takes, and especially because people don't look at it until they absolutely have to. And if you are, let's say that you have the down payment, but you haven't looked at what is your income versus your debts and versus your credit score, then you may be surprised. And especially in this type of market, at least in this 2022, we have a crazy market in which you don't have a lot of time to think. You're going to have to do an offer, and you're going to have to basically do no conditions, things like that. So if you're buying in the GTA, the longer you prepare, the better off you're going to be. So don't leave it to the last minute. That's my advice. So
yeah, absolutely. I agree with you 100%. So let's go look at the little chart just so you can understand what it means, the different rate and how much your monthly payment is. I love that. I never get sick of seeing that when people say, well, it went up 22%. How bad could it be? Or how good, I'm still paying under 3% mortgage. That's fantastic. So do you want to share your screen?
Yeah, absolutely. So what you have is there's two things. The average, I wouldn't say the average mortgage is 500,000, but that will give you an indication. So if you
Yeah,
have
I
a
think
$1
that's a
million
nice,
mortgage,
nice round number.
yeah, exactly. So if you have for every 500,000, if your mortgage interest is 2.5, let's say that you're moving to another place and now you don't qualify for the 2.5, so your payment would be $2,243 at 2.5%.
Okay, I'm gonna be low tech. I'm gonna draw it out. So 500,000.
Yes, is $2,243. And if your interest rises 0.5%, so now you have a 3%,
Sorry, what was the first 2.5%?
2.5%.
Okay.
And then the second will be at 3%, the same 500,000, your payment would be 2,371. So you're basically changing $130 a month.
Okay, can we see that? Look at that. It's really not bad.
It's
So what
not that bad.
What is it? So it's 100 and how much difference?
$130.
Okay, not bad. So when people say, sorry, 130?
Mm-hmm.
Okay, low tack, everybody. Low tack is the way to go. So $130 difference from 2.5% to 3%, and $130 difference. That makes a difference when it goes to 1% higher, and then it might go 1.5%.
Absolutely, because that is only a monthly change. But if you do it in a year, and remember that not only your mortgage will go up, right now the utilities are also going up.
Right, and taxes go up, and everything.
Taxes,
Gas
you
has
know,
gone
property
up.
taxes will go up depending on the price of the property. Lots and lots of things. So you gotta consider that as well.
Right, and that's why the banks do this qualifying rate, because they want to know. You're not gonna call them and say, I can't afford another $130 a month. I got to sell my house. And that's really what we're going to see, because we're talking about $500,000. That's a very small property these days. If you have a mortgage, let's say you buy $100 million property and you only put 20% down, that number is going to be exponentially bigger. So when you think about, now I have to figure out, how am I going to make this money? This is my salary. This is my spouse's salary. How can I afford to continue to live in this house if I'm not increasing my income? How do I do it? And that's the scary part, even though, and that's what people, you'll even see the changes now. People are getting afraid to think, what if it goes up another 0.25%? What if it goes up another 0.5%? I won't be able to afford it. So even though I can afford it today, I'm terrified and I'm going to sell.
Yeah.
So you'll see more come on the market within this year.
Yeah, for sure. Because the thing is, the devil is in the details. So the little things that add up is what is going to be surprising everybody. It's not only that little thing that is going into your mortgage because it's going up a little percentage, but is the overall long-term maintenance of the property, utilities, and property taxes. And remember, the average house here, at least in the GTA, is between 700,000 to 800,000 minimum. And if you have, well, that's the very, very small house, right?
That's for a condo, yeah. So if you can buy a condo, let's just have a real life example, let's say. So if you buy a condo for $500,000 as an income property, you have to know, will you be able to get this much rent plus the maintenance fees? I don't know. It's really running into, how is this going to work? If that is a possibility for you to pay every month, that's a whole different story, because you don't have to say, well, it's an income property, I have to make income from it.
Yeah.
The other thing too is, when you think about condo, we're talking about condo, that is only the mortgage plus your utilities plus your maintenance fee. Could put you over the top. You might be looking at closer to $3,000 a month. So these are all the things that when you decide to buy, talk to a mortgage agent or a lender first. Talk to Araceli first. If you're not even close to that number, she'll help you with your finances.
Yeah.
and then
Yeah, it is.
and then come see me when you're ready.
It is better to put it all on paper, and then you'll know if you're ready or not for it, because a little bit of change could turn everything upside down, and it's just not worth it. It's better that you check before. So that's basically the advice today. So just don't panic, like just do your homework and just put it on paper. If you don't know how, just let me know. Give me a call. We can put it all on paper. On paper, you only lose maybe a half an hour and a little bit of paper.
And tears.
And tears, yeah.
No, it'll be good. It's not scary, I promise.
But it's better to do it, because if you are not able to afford it, or you are kind of on the edge, you may want to look for other sources of income. Maybe you want to look at a different type of property that you're going to be able to rent a room, or maybe the basement, something like that you can plan ahead to increase your income a little bit. So do everything on paper. I always say that we create things in 3 steps. First, you imagine it, then you put it on paper, and then you do it. So don't skip to put it on paper, because that's where people get in trouble.
That's right. That is always the first step. And plan out what you want to do. We can manifest all day long, but when it comes to what you want to do, everything touches money.
Everything touches money.
And do a plan. That's it.
Yeah.
It's not rocket science.
Yeah, that's right. So that's basically the advice. We just wanted to have a quick chat about that. So if you feel concerned about the interest rates raising, and maybe you're going to be due for changing your mortgage, or you're looking at refinancing, maybe it's worth to take a look at your overall finances and see if you can do it, because that might make a big difference for you.
Yeah, and that's the other thing too, that you don't have to be afraid. Sometimes it's just a little creativity of how do you tweak it? Where do I go? Who can I talk to? And Araceli is your first stop if you're unsure of where you want to go. So that's the easiest thing. Both of us know a lot of people too. We can refer you to the right mortgage agents or the lenders that might, be a little more creative than others.
Yeah.
So don't be afraid. I think it's all possible.
Yes.
Yeah.
Just continue to move forward and try to increase your income anywhere you can, especially if you can do it through real estate. That would be the best. So great. Okay, thank you, Colette. So we'll see you
joining us
at the next one.
Okay, bye everyone.
Bye.
Thanks for joining us today. If you'd like more information, or if you have any questions, please go to my website at www.coletterabba.com.